Hey everyone, my name is Cade Bekanich, Certified Financial Planner, and today we're diving into something that is truly close to my heart: creating financial security for children with special needs. When families come to me with that look of concern in their eyes wondering, what happens to my child when I'm gone? That's when I know we can create something truly transformative together. The reality is, planning for a child with special needs requires specialized knowledge and a very unique approach to financial planning. This isn't about just saving money, it's about creating systems that protect benefits, maximize resources, and ensure quality of life for decades to come. And the good news? We have incredible tools to make this happen. The content in this video isn't advice, it's simply some specifics that we use for planning with people who have disabilities. Each state will have their own rules and regulations. This is simply just a general guideline of federal laws. So let's explore how we can build that financial safety net that gives both you and your loved one with special needs the peace of mind you deserve. So what's first? We have to understand the challenge. We have to understand what it is that you're up against. Many individuals with disabilities rely on supplemental security income and Medicaid. These programs provide crucial support, but they do come with strict eligibility requirements. The big one, asset limits. For many of these programs, individuals can't have more than $2,000 in countable assets. Think about that. $2,000 is all they can have in their name. This creates major dilemma for families who want to provide financial support without disqualifying their loved ones from receiving these vital benefits. Imagine working your whole life to leave something for your child only to have it cause them to lose healthcare and income support. That doesn't even make sense. And even though it seems unreasonable, it's practical, and that is the challenge we're solving today. Let's start with one of my favorite tools, a 529 ABLE account. For those of you who don't know what a 529 account is, a 529 account is designed to provide for education expenses for the beneficiary of the account. Created through Achieving a Better Life Experience Act in 2014, these accounts are a complete game changer for families with children who have special needs. Think of an ABLE account as a tax-advantaged savings account for people specifically with special needs. So what's the key feature? Assets in these accounts don't actually count toward that $2,000 limit for benefits eligibility. And here is what makes ABLE accounts so special. Number one is tax advantages. The money grows completely tax-free when used for qualified disability expenses. Number two is flexibility. Funds can be used for a wide range of expenses, including education, housing, transportation, healthcare, and even just basic living expenses. Number three, accessibility. The account can be managed by the individual with disabilities if they're able to, or by a parent, guardian, or even a financial representative. Number four, these accounts are extremely easy to set up. Unlike trusts, you can open one online in about 20 minutes. And although these accounts are fantastic, there are some limitations to be aware of. The person with disabilities must have been diagnosed with that disability before age 26. And this will actually expand to age 46 starting in 2026. Annual contributions to these accounts are limited to the federal gift tax exclusion amount, which in 2025 is $19,000. If the account exceeds $100,000, Social Security benefits may be temporarily suspended, although Medicaid will continue. Earlier this year in 2025, I helped somebody set up an ABLE account for an 18-year-old with autism. They're contributing $500 monthly, creating a resource that will help him with housing, transportation costs, and maintaining his benefits throughout the rest of his life. It's already providing incredible peace of mind for both the beneficiary and the family. Now let's dive into something a little bit more complex: special needs trusts. These are the foundation of protection for people with special needs. While ABLE accounts are fantastic, they do have limitations. And that's where special needs trusts, also known as SNTs, come into place. These are often the cornerstone of a comprehensive financial plan for someone with special needs. A special needs trust is a legal arrangement specifically designed to hold assets for a person with disabilities. This preserves their eligibility for government benefits while still allowing them to maintain their quality of life. And unlike ABLE accounts, there's actually no limit to what can be held in the trust. There are two primary types. First is a third-party special needs trust. These have been funded with assets that have never belonged to the beneficiary, like a parent's life savings, life insurance, retirement account, or even inheritances. Something extremely important to consider is that there is no Medicaid payback period requirement when the beneficiary passes away. This can benefit multiple generations of people. This is ideal for estate planning and larger asset protection. And number two is first-party special needs trusts. These documents could hold assets that belong to the person with disability, things like settlement proceeds, inheritances received directly, or even accumulated savings by the individual. However, this does require a Medicaid payback provision when the beneficiary passes away. And these trusts must be established before the beneficiary turns 65 years old, which makes it a time-sensitive matter. What makes these trusts so powerful is not just asset protection, but flexibility. A properly drafted special needs trust can provide for additional caregiving beyond what the government benefits provide. Things like travel expenses, technology, education, and therapy can even be covered by the funds in these documents. I recently worked with parents who established a third-party special needs trust for their daughter and funded it with a life insurance policy. Now, when they pass away, the insurance proceeds will go directly into the trust, creating a resource that not only supplements her government benefits without jeopardizing them, but will provide her additional benefits should she need to spend money in excess of her government benefits. This is an amazing strategy for estate planning. It's the missing piece. Having these specialized accounts is just one part of the puzzle. The other critical piece is proper proper estate planning, ensuring that assets flow to the right places, the right way, at the right time. Here's where I see families make costly mistakes. Without proper planning, well-intentioned gifts can create major problems. For example, if grandparents name their grandchildren with special needs as a direct beneficiary in their will, those assets could completely disqualify them from receiving their governmental benefits. Instead, all estate planning documents need to be coordinated with what the greatest intention for the person with disabilities is. This includes properly written wills directing inheritances to the special need trust directly, not to the individual. Beneficiary designations are also important, meaning ensuring that retirement accounts, life insurance, and other assets name the special needs trust as the beneficiary, not the person with disabilities. There should also be a letter of intent, which is essentially just a detailed document describing your loved one's needs, preferences, and required care. Don't forget guardianship considerations. This determines who will provide care to the person with special needs when the initial caregiver passes away. There's a recent situation that I'm familiar with in which a family had designated all of their retirement accounts to the person with intellectual disabilities, which, if it wasn't caught and changed before they had passed away, would have completely impacted his governmental benefits and possibly prevented him from receiving these benefits for the rest of his life, depending on how much money he would have actually received. And this is why both ABLE accounts and special needs trusts can work beautifully together. Here's a quick example. The special needs trust can actually fund the ABLE account annually up to its annual contribution limits. This ABLE account then can be used to cover housing expenses without affecting things like SSI. Daily expenses can also come from the ABLE account, which makes them much more accessible. These funds are much easier to get access to compared to those held in special needs trusts. However, the ABLE account does offer tax advantages and simpler administration. I often recommend the dual approach to families using the ABLE account as an efficient spending vehicle, while the special needs trust serves as the more long-term financial foundation. The way that you title assets might be small details, but they have a major impact on someone's overall financial situation. Let's talk about something that might seem small but can have enormous consequences: how assets are actually titled. This is an area where attention to detail makes all the difference. It could count as resources for benefits eligibility, be subject to Medicaid estate recovery after their lifetime, and even complicate management if the individual can't make financial decisions themselves. Strategic asset titling might affect things like placing the home in the name of a special needs trust rather than the individual, using an ABLE account for smaller assets and spending money, and even possibly establishing a limited liability company or business interests to protect the business value. In addition to both ABLE accounts and special needs trusts, you could even implement a UTMA, which is a Uniform Transfer to Minors account. These types of accounts are designated solely for minor beneficiaries, where someone contributes to the account on their behalf, and the assets are never able to be removed because the specific intention is to provide for that beneficiary in the future. Ultimately, the most successful special needs planning involves a team of specialists working together. Typically, we start with an attorney, someone who specializes in special needs trusts and disability law. Then we follow up with a care manager, someone who understands the supports and needs of these people with disabilities. An accountant familiar with special needs tax strategies is one that can help make major differences in financial planning for the beneficiary. Government benefit specialists help beneficiaries to maintain benefits while maximizing other assets. And of course, a financial planner will help manage these assets and determine the correct titling, as well as the allocation of these assets to maximize your loved one's financial future. When these professionals collaborate, the results can be extremely transformative. Each brings specialized knowledge that, when combined, creates a robust safety net for your loved one. The overall goal of special needs planning, whether it be an ABLE account, a UTMA, or a special needs trust, is peace of mind for your future for your loved ones with disabilities. We've covered a lot in this video, but it comes down to this: understanding the do's and don'ts of planning for somebody with special needs. The families that I work with sleep better at night knowing they've created a system that will provide for their loved ones with special needs long after they're gone. They've ensured that their child will maintain essential benefits while still having resources to achieve a fulfilling life. This kind of planning doesn't protect just assets. It protects dreams, independence, and quality of life for your loved ones with special needs. It's about creating a future where your loved one can thrive, not just survive. So if you have a loved one with special needs, I encourage you to take that first step. The future may seem uncertain, but with the right planning, you can create certainty and security that lasts a lifetime. Thank you for joining me today. I'm passionate about helping families navigate these complex waters, and I hope this information empowers you to take action to secure your loved one's financial future today. Remember, it's never too early or too late to start planning. My name's Cade Bekanich, certified financial planner, and if you know someone with special needs that could benefit from proper financial planning, click the link in the description below to schedule your first meeting today. Thanks for watching.